Well, hello and welcome to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I am Yatin Mota.
Well, it was another day of extremely range-bound session with the Nifty ending just a shade below that 18,300 mark, but the broader end of the markets were clearly outperforming as they logged in gains to the tune of 0.3 to 0.5% or thereabouts. If you look at the sectoral movers, barring the pharma and the metals pack, all of the indices managed to end the day with gains. And among the top Nifty losers, you had the heavyweights like DRL and L&T post their fourth quarter performance. They emerged as top laggards. Hindalco, JSW Steel and Divi's Labs were among the losers. And when you look at the gainers, Asian Paints, great set of numbers, double-digit volume growth. On the back of that, that stock was up 3% and the top gainer on the Nifty, followed by the likes of HUL, Adani Ports, IndusInd Bank, which continues to gain for a third to fourth straight session. Yatin, from the broader end of the markets, what are the stocks that you're picking up today?
If you look at the markets today, a lot of result reactions were seen. Now, if you look at Asian Paints, obviously the top Nifty gainer, good results. But on the flip side, we also had Dr. Reddy's and L&T. These are the two stocks which nosedive in trade today. In fact, both of them were down over 5% on the back of weak earnings and weak outlook as well. Hindalco, again the top Nifty loser, reacting to its subsidiary Novelis, which is aluminum can maker in the US, and clearly that subsidiary's performance was not satisfactory, because of which this stock also fell. We had Divi's Lab and JSW Steel, dipping in trade. But yes, as far as the mid-cap 500 or the top 500 companies of the country are concerned, we have Sanofi, which has moved 9%. After they announced the buyback yesterday, demerger, yesterday. So that stock was doing well. Chola Holdings 6-7% up. Ratnamani Metals on the back of good results. We will discuss that in detail. Also we had the likes of AB Capital, Paytm, clearly witnessing some profit taking after the earnings. So a mixed bag of markets, but yes, mid caps were outperforming. Advance decline ratio, probably because of that reason, in this dull market was 2:1, so 2 advances for 1 declining. So clearly the mid cap end of the market was quite stock specific and full of action.
Right, lot of stock specific action in the markets, but let's also take a look at the stocks that are on our radar this afternoon, starting with L&T. Now this stock, Yatin, was among the top laggards on the Nifty. Of course, people are disappointed with the kind of margin performance that the company has seen, but what we have ignored, largely ignored, is the order inflow guidance that was met for FY23, and for FY24 the guidance is also pretty strong, in the range of 10 to 12%. In fact, management in an interview to CNBC has said that they expect margins to start normalizing from the fourth quarter of FY24. In fact, the company is cautiously optimistic on on FY24, but it could be rather called prudent, being prudent in this environment. A lot of macro tailwinds may have already played out for L&T, which is reflecting in the stock price as well. But when you look at internationally, the environment is weak. So that that may cause the stock price to correct further from here. But I was speaking to Nirav Karkare of Wisdom in the morning, and he was making a case that when these headwinds play out, the stock price may see a dip, and that will present a good opportunity to buy the stock, given the fact that the strong corporate governance standards, and especially since the mood around the capital goods space is anyway very upbeat. So that in that sense, it's a very strong investment opportunity, and the margin disappointment is one side of the story, but it's the kind of order inflow guidance that it's given that could play going forward. And Pratik Agarwal is also of the view that even though margin issues will persist, it's the order book that will continue to be strong for this company. So this is one stock that is on my radar this afternoon.
So apart from L&T, Dr. Reddy's, this stock also fell almost 6-7% in intraday trade, and the reason here was that the quarter was weak. In fact, if you adjust for R&D cost and employee cost, the gross margins took beating. In fact, they had divested certain portfolio of drugs to Eris Life Sciences, and despite that, we couldn't see much of improvement as far as margins are concerned. In fact, if you look at Dr. Reddy's, Goldman Sachs has a neutral rating on this one with a target of 4750. And if you look at the Revlimid drug, this is one blockbuster drug which has got some competition now, and because of this one-off opportunity, probably you could see some gains in the fourth quarter, but moving ahead, these gains would probably normalize, because of which there could be some risk to earnings, and that is the reason why the shares of Dr. Reddy's fell over 6-7% in trade. Obviously, the share was running up, was at 52-week high, so a big profit taking is what happened after disappointing fourth quarter earnings.
Right. If you look at some other views on Dr. Reddy's, some of the brokerages feel that the main acquisition that it had made will turn EPS accretive from this fiscal itself. So that could be seen as one positive, because some brokerages have maintained their buy rating on the stock, and maybe some other launches that are slated for the fiscal could support stock price going forward.
Correct.
The other stock on my radar is Godrej Consumer. The stock was up, good earnings, 25% plus profit growth. The stock has run up quite a bit in the last last 1 month or so, 20% or thereabouts. Plus, at a trailing PE of 57.5, the stock is looking pretty expensive, which is why we saw a correction come in once that Raymond Consumer Business acquisition was announced. There were a lot of concerns surrounding the price of the acquisition, the fact that it was a tad bit expensive for Godrej Consumer, given the fact that Raymond's consumer businesses margin are much lower compared to GCPL. So how fast the company can scale up Raymond's margins would be something that will be a deciding factor going forward. But aside of that, for the India business, the prospects are looking pretty good. It has done pretty well compared to peers. The small packs of hair color and premiumization of air fresheners are working well for the company. In fact, the management has also guided for high single-digit volume growth for FY24. As I mentioned, the only caution would be how the company plans to scale up Raymond's margins and make it EPS accretive. And the management was on CNBC TV 18 today, and they have said that they are targeting 25% margins in Park Avenue by FY25, and that the synergy benefits in Park Avenue will start to show from the second half of the current fiscal itself. So all in all, things are looking pretty good for this stock, but it's a tad bit expensive and has run up quite a bit. So we'll have to see how this entire acquisition plays out. Aside of that, the domestic business and international business has also started picking up. So business-wise, things are looking pretty well, but let's see how the stock price fares from here on, given the fact that how soon they can scale up Raymond margins.
Clearly, so this is one thing that we'll watch out for. Obviously, the management is guided that the Park Avenue margins would look upwards of 25% by FY25, and they would be looking at good growth as far as India business is concerned, with high single-digit volume growth. Obviously, if you look at Godrej Consumer, they have done much better than the other FMCG companies in terms of volume growth, be it HUL or be it Britannia, wherein volume growth concern was always there on the street. But that concern really was not there in Godrej Consumer. In fact, their African business also, along with Indonesian business, saw some good green shoots and turnaround for the quarter. Obviously, this is one stock we'll watch out for, has run up and is slightly expensive on valuations. But one space which is doing well is the steel pipes and saw pipes segment. If you look at the results for most of the companies which have reported so far, earnings have been quite strong. Be it Welspun Corporation, and today we have Ratnamani Metals, which has posted a very strong quarter. Net profit was up 72%, revenues up 54%, and look at the margin expansion, nearly 300 basis points, almost 3% on a year-on-year basis. And if you look at the stock price, today the stock went up as high as 10%. So clearly good earnings from Ratnamani Metals, and this company has really rewarded shareholders over a period of time with good dividends, buybacks, bonus issues, and now we are seeing some good activity as far as the entire pipe industry is concerned. Obviously, the capex in water projects, in oil and gas projects drives the entire pipe industry, and there are certain special pipe makers from galvanized pipes, steel pipes, saw pipes, duct pipes, and DI pipes. So there is a whole host of these pipe companies which are doing well. So watch out for the entire space, should do well. Ratnamani Metals ending the day up nearly 7%.
Yeah, in fact, I think it was the best ever quarter for Ratnamani Metals. Well, with that, we've come to the end of this edition of Closing Bell. Thanks a lot for taking out time and watching us this afternoon. But we'll be back with market action tomorrow morning at 8:30 a.m. So don't forget to tune in. For now, it's a goodbye from me and you.
जुड़ने के लिए धन्यवाद.